In this video, I'll be looking at declining balance depreciation. Basically, declining balance depreciation allows you to depreciate your asset at an accelerated rate during the initial periods. Uh, for example, this would be more beneficial where you would need more tax advantage during the initial periods when you install the equipment, for example. Uh, the way that this is calculated is the book value of the fixed asset cost less the accumulated depreciation. Excel actually has a built-in function which allows you to calculate the declining balance depreciation. To do this, click in B12 equals, and the function that Excel provides is dB, declining balance, open a parenthesis, and the first argument is cost. That is the initial cost that you spent on buying the asset. In this particular case, the item is Cisco Interactive Board, which has costed us $200,000. The cost is in B5, comma, the salvage value, that is how much you expect to sell this asset for after its economic life, which is in B7, comma, the life is the economic life that you would be able to use your asset to generate income. That will be in B9, comma, the period, that is actually the year. In this particular case, we will make it a 12, the first year, and close a parenthesis. But there's a mistake that I've made, and the mistake is that we need to copy this formula down, and to be able to copy it down, we need to make sure that some of the references are absolute. For example, B5, the initial cost, if I don't make this absolute and drag it down, it will actually pick the next column and give us inaccurate answers. To make this absolute, just click between the figures and press F4. Similarly, we need to make sure that the salvage value is absolute, press F4. The life needs to be absolute, press F4, and the year needs to be relative, because as we drag it down, we need to make sure that it changes. Hit enter, and you can see that the depreciation in the first year is $82,000. You can drag it down to 5 years, and you can see in the initial years that we have more depreciation, which means we will get better tax advantage, or more tax advantage, in the initial years of this particular asset. The second, let me just close that. The second part of declining balance depreciation is to determine its value, the new value after depreciation. To do this, click in C12 equals, we need to get the initial cost, which is in B5, and we need to make sure that that is absolute, because we need to drag it down. Press F4, minus open a print, minus sum of depreciation. So the first one is in B12, and we need to make sure that is absolute as we drag it down, comma, B12. I've put B12 again because as we drag it down, you'll see that the one which is relative on the right hand side would actually change, whereas the absolute would stay absolute and give us the right answer. Close in parenthesis, hit enter, and the new value is 100.